ask your question.
Thank you, Yogesh. Governor, 2-3 questions, please. So this real policy rate...
You can ask one, because...
The real policy rate, you said that, now 5.6 inflation and 6.5% repo rate. But the one-year T-bill is trading at 6.95. So effectively, if you take 5.6% inflation, the real rate is already about 140 basis points, 130 basis points. Will you be guided only by the pre-COVID, which was, I think, 230 basis points difference, real positive rate? So what will guide your decision to pause? Or will it be also actions of other central banks? And if I may, so what is the total exposure of the banking and the NBFCs to the Adani Group? Because we just heard that REC has 7,000 crores. So is there a number that you all have already assessed? And if you can tell us whether you would be cautious that that number shouldn't increase.
Okay. And now the first part of the question, relating to that real rates and all, Dr. Patra can take, then I will take over the next question. I mean the next part of the question.
So as you point out, we have nudged
Put the mic on.
We have nudged the real policy rate into positive territory. What its level will be decided by the evolving macroeconomic configuration. So it's not necessarily guided by pre-pandemic levels or anything, but by the evolving growth and inflation trajectory.
But 130 is big, no real rate?
No, actually, we're talking about the real policy rate, right? So you take the policy rate and adjust it for 4 quarters ahead inflation, as we've always done, and you get less than 1%. You get 0.9. Okay. And about foreign banks and all that, we take into account all developments in the world, but monetary policy has an exclusive domestic orientation, and it will react to domestic developments.
Now, with regard to the other part of the question about the exposure of the banking sector to the to one particular business conglomerate, we have issued a press release on last Friday. I have nothing more to add to that. Individual cases and their numbers, as you are aware, we do not discuss in the public domain. Having said that, let me mention in addition, because so many questions are being raised in the public domain, in the last 3 to 4 years, the Reserve Bank has taken a number of steps to strengthen the resilience of Indian banks. We have come out with clear guidelines to regulate the governance in Indian banks. We have issued guidelines about the functioning of the audit committees. We have issued guidelines for the functioning of the risk management committees. We have now made it mandatory for appointment of chief risk officer in banks. We have also made it mandatory for appointment of chief compliance officers of the banks, and we have given through our regulations the desired level of autonomy to the chief risk officer and the chief compliance officer with regard to his functioning within the bank. The chief risk officer, for example, reports directly to the audit committee. And there are so many other regulations which I am not going into. We have also rationalized in the last 2 years the large exposure norms, and all that I would like to add at this point of time, that the Indian banking sector, including the the NBFC sector, since you referred to a couple of them, the Indian banking sector and the NBFC sector continue to be resilient and strong.